Hello and welcome everyone to the weekly Delphian meeting. Thank you for attending. So today's agenda, we'll go through the market update. I'll give you a quick snapshot of studies since I did it for someone else. So I might as well show you guys, kind of a quick update on that, how those are progressing. And then Shawn's going to go through the earnings stuff. So, and obviously feel free to pop in questions throughout and don't be shy. So thank you, and let's get started. Okay, so for last week, we were just peaking over 45 for state one, so now we're slightly above that. I think the green pie's grown a little bit, so just kind of squeaking a little higher. All the indices are bullish still, and we'll go through an individual analysis of those. I think the state aids dropped it just a little bit, so let's take a look at the market pulse there. So from the last week, we were looking at 46. It's kind of flatlined, climbed up just slightly. So once we're over 45, we kind of list that as a overbought condition. So we're now firmly overbought. We're holding above that 45. I'd say a good sign here is the state aids have dropped a little bit, not a ton, but still a little elevated. But historically, but overall we're still slightly overbought as far as the market there. State ones and state eights. As far as new lows, nothing happening so far. We're still flatlined, nothing big, no spikes. Kind of creeping higher as far as and that's kind of what you would expect when we have all these symbols in state one, all the indices in state one. So let's dive into each one of those. So for SPX, we went in on 1018. State one was the transition, and it's followed our typical pattern. So ran right up to target one. So what we normally see here is resistance where it kind of pulls back. Not all the time, but this is kind of like the base scenario, and then it'll run up here. So that's kind of how things typically work. So I think we're right around that target one area for today. So I'd expect resistance into that, target one, target two area. Typically, there'll be like some, at least a little drop here, but it doesn't always happen. So, but, we always kind of just plan for the base case, which is, that curve that are displayed there. So that's just something to think about. So other than that, it's looking great start. This is ideal, what you want for that day one. I mean, just walked right up to it. So once we get that 1, 2, you just have to be a little careful, see if we can break through there. And then obviously the next level after that is target 3. All right, so from there, let's also look at obviously the 50-day. Someone's really loud at me. So the 50-day SMA, obviously we reclaim that. So that's another level of support that we can use going forward here. So we had kind of similar thing back here in September where we had little drops below it, but it didn't get too far away and eventually reclaimed. So still bullish as far as that, and like we'll use that as a ongoing support level because it's been such a great friend through this whole thing. So SPX obviously kind of explain that your key support here is going to be the entry price. If things do turn around at this target 1, 2 level, So just be careful of that. You know, other than that, you know, what's the 50-day at? It's 44.65. So kind of right in the same kind of ballpark here as that entry price support. So strong support. So you got, you know, resistance at these two levels, and then, you know, 44.86 and then 56 are going to be your support levels, you know, near term for SPX. So Russell, now the Russell played a little trick on us. It went up to the target. So as you know, I talked about before, we've been in this channel for so long, 2360, and you know, the state ones have not been doing well, been doing well, and then something happened right here last Thursday, and we just had to like block up moves, and it's like outperforming everything, which is very, very strange. I don't know what the impetus is for that, but you know, I think we did make new all-time highs on this, which was like right around that target 1 level, and I think it's up today again too. So this one, for some reason, turned on, and the other ones are kind of, you know, meandering, but this, you know, obviously strong moves there. But you know, we're getting into the kind of target 1, target 2 area where you know, so it's coinciding with you know, the SPX hitting right at that resistant level 2. So they're both pretty much right on the same track, which is, I'd say, bullish overall for the market, you know, medium term. So, you know, we like to see the Russell, the small companies performing well. So, you know, I just be careful right here with resistance. And I think Fed is talking today, so they move markets. So I think the expectation is tapering. I don't know how much or what. So I think that's a little bit up in the air. You know, they're definitely the ones that move the market. So if they really pull back, tapering, and you know, that could be an issue. I really don't think the market's going to have like a big, you know, I think the rate, when they start raising rates, obviously, you know, if you look historically, when they pump up the rates a lot, that's when the market tanks. So I think that fire alarm, you start hearing about rates getting moved up, you know, that'll be your sounding the alarm. I don't, you know, the tapering, depending on what they do, could, or, you know, could be a non-event, or, you know, if they barely scale back, or sorry, you guys are loud. You know, if they barely scale back, it wouldn't be too much of an event, or, you know, as far as I see. But, you know, I would say, you know, the thing you do want to look for is, you know, can the Russell stay above, you know, we've been talking about this since February, you know, not since February, but, you know, at least for the last like 5 months or so. You know, it's basically hit above that channel. So if it can hold above there for a while, you know, that'd be very bullish for, you know, a breakout. You know, you think of all these channels, basically, you know, you just have to be careful of the head fake, and then in the first little period there. But, you know, typically when you get out of these channels and it goes one direction, it's gonna break out pretty strong. So, but you know, just be careful of the head fake in the first like week or so. You know, if it's having problems staying above, you know, that original ceiling, you know, that should turn into support. So if it can't hold that support, then, you know, it'll come back down in the channel. So, okay, so that was a quick summary. Questions, comments? I muted.
This is Dave. Comment on the Russell there. The head fake was, I think, I was following the news, and it was almost infrastructure's got to pass because president's going to Glasgow, and you know, the environmental congregation there, and then and so thought, oh, well, it looks like it's going to get passed now. And that was a big update, I think, on Friday. Then it was like, well, it didn't quite pass. So there's like a pullback now. And it's like, I think when it officially becomes passed, you'll see a kind of a breakout day. I think it'll actually hit the target that you had in the green there. And then it'll take 2 or 3 days before people figure out who's going to get what, and there'll be a little bit, just like you said, it usually gets up there and then it pulls back a little, and then if it's going to be a breakout, then it'll go back and break through.
Yeah.
I'd be looking for that, like when it's an official announcement on infrastructure, and like you said, the Fed is speaking, and I think it's a kind of a benign thing. It's pretty much what is going to be expected. I think whatever that is whatever people are expecting. So I don't think it'll be too big a shock to the equity market.
Yeah, typically, they try and, message us ahead of time, so everyone knows exactly what's going to happen.
We're going to taper exactly which we'll tell you later, but it won't hurt too bad.
Yeah. So, and anything about rates hikes moving forward would be, obviously bad. The rate hikes are going to be, the tapering isn't a big deal. When they start, get rid of, assets and things like that, that's a different story, but they're buying less, so, I don't know how much that's going to be, but if they cut it off have a real aggressive plan, that would be bearish, but, they still have all this stuff on their balance sheet. So like when they start to unwind that's a bearish thing, and rate hikes are the big bear. Just saying. Okay, other questions, comments? Thanks, Dave.
Hey, Josh, it's Lee.
Hey, Lee.
Hey, I want to say what I'm thinking and then have you kind of chip in on it, okay?
Sure.
2 years ago, we looked at the Russell 2000 as being a strong indicator whether we felt bullish or bearish. But it just seems over this last year, sometime, we've changed how we're thinking, or maybe evolved a little, to where I feel like we're looking at the S&P 500 with the 50-day line is the first, and then we kind of confirm our feelings with the Russell. Are you thinking that that's somewhat accurate, or how are you feeling? What is because it used to be it was hard and fast. We look at the Russell 2000.
Right.
But I feel like
I think it's an equal weight, SPX and Russell. I mean, I think that's what at least I've been talking about for quite a while is, I look at them equally and, see if, kind of confirming or, okay, this one's like lagging a little, or, Russell really broke out, or, so I look at both of them kind of with equal importance, I think.
Okay. Very good. Thank you.
Because, like the S&P 500, that can really move, markets based off of those big caps, like those are controlling entities, like massive corporations, and, the Russells, obviously the small caps, and, they're affected by different things, legislation, regulations, they have different effects. So, yeah, I think it's important to evaluate both and, hopefully they're aligning, but if not, then you just kind of, have to figure it out, between the two.
Yeah, it just seems sometimes the Russell's going down in its trough while the S&P is still stepping up. So anyway, it's just something for me to think about. Thank you.
Yeah. And like I said, that's a lot of future expectations. I mean, that's where the prices are going on these. So like if, they think small companies are going to get hurt, or, they're unsure, it's going to move sideways. Whereas, like the big ones are, it's not the same environment, then those can creep higher. So, it's really all about price, expectations of future earnings. So. No, thanks.
That's just, Dave, can I ask, Rod, can I ask Leah a question there? Leah, the reason I'm trying to understand the reason you were formulating the question. You mentioned something about one index being a confirmation of another index for what kind of is kind of what I was thinking. When I I have positions in a couple of the indexes, right? Indices, right? So it's like those positions kind of are affected by the way that index works. But were you kind of like, was your question sort of trying to zero in on the better time to execute the trades that show up in the in the high probability trade group? Is that where you were kind of aiming at?
No, I was really trying to figure, because like a year or 2 years ago, it was hard and fast, or I felt it was, that we were looking at the Russell 2000 to figure out if we were bullish or bearish on the market. But over the last 9 months, 10 months, year, it seems to have shifted a little to where, and this is just for me, we're taking the S&P 500 much more into consideration for market direction. So really, I'm talking about market direction.
Okay, well, that's what I was kind of trying to understand. Market is, see, I personally, I consider like all three of those indices like different markets. In my mind, that's the way I think of them. Maybe that's wrong, but I mean, that's the way I think of them. They kind of have their own little behavioral characteristics. So I just thought, so I don't kind of think of the market as a whole. This is me, and I'm just talking to talk here, not to talk, but to try and zero on what Lee's thinking about here. So for me to be bullish, I can be bullish on one index, but not necessarily as bullish on another index. And it's the stocks in that index, whether if I'm bullish more on the Russell, it's the stocks in the Russell that I'd be more bullish on when I'm bullish on Russell, if you catch my drift here. Same thing, the S&P. It's like I don't really try to put all stocks in one category like the market and think that, well, they're all going to react if the sum total of everything is bullish. And I think that's where you were going, kind of thing, right? I don't know.
Yeah, it gets there. I think you're a step ahead of me, but you're right. See, I used the Russell to determine whether I was going to, let's say, place a trade, whether the market was bullish or bearish. But now, and I'll say maybe our knowledge has gained, we're looking with more granularity, and we're looking at the S&P plus the Russell. And that was, and I'm trying to figure out market direction, because sometimes the S&P and the Russell disagree. One's going one way. Generally speaking, the S&P has been going up for a couple of years.
Right.
And so it's more, I'm skittish with placing trades. Well, just because I am. If everything's a hard and fast bull market, hey, everything's a winner and I'm doing great. But if you have to be more discerning, then it's how do you do that? Does that make any sense, Dave?
Dan here, I got a comment on that. I see the the S&P that's just been going up to all new highs, and it's been led by a lot of the several top stocks, okay, that
Sure,
had a lot of momentum. And I think now you can see by the market commentary this morning that the S&P is starting to have potential to flatline. And I think what a lot of the traders are looking for is where can they get the value, and that would be in the scarcity. So if you look at the rut, it's been trending sideways for quite a long time. It really hasn't partaken in the advance momentum that the S&P did. So I think if you're looking for value, you could look at the low cap stocks because they're more likely, you're more likely to double your money, in a $50 stock than you are in, say, a Tesla, $1,200 stock.
Yeah.
So I just think that's just, as long as the S&P treads water, I think the rut can try to play catch up until any kind of dynamics change. Certainly, Powell speak can have an impact, but I don't think it's going to be such a big impact right away.
Yeah. So let me see if I understand, Dan. Are you saying the trades you're placing now generally lean towards the Russell 2000 stocks than the S&P stocks?
Yeah, I think there's probably that, that mindset in a lot of traders because you're going to be looking for value. Where are you going to be able to get the most bang for your buck? Where's the opportunity or the probability of, doubling your money or at least increasing your profitability. So I think because the S&P has gone kind of like the rocket ship and the rut's just been trading sideways, it hasn't really taken off yet. So and the S&P will get to a certain point of saturation, if you will, and then I think that's when you start seeing the other markets play catch up.
Okay, so, but when you're trading in the Russell, you're in your mind thinking, well, it's in these channels, and so it'll run up roughly so far to the top of the channel. And conversely, if it loses, it would probably be down around the bottom of the channel.
Right.
Okay.
Yeah.
Okay.
But I mean, it's been treading sideways. It looks like it could be a breakout, but you have to watch it. Like Josh said, you have to be careful that you're not getting a fake out on it.
Yeah.
So you just have to keep a careful eye on it if you're putting a trade on it.
All right. Okay. Thank you, Dan.
Yeah.
Let me add, if I may, something that maybe is a little bit more practical around that concept. This is Sudhir, by the way. I just joined a few minutes ago. What I have found is that the green pie chart on the dashboard is really helpful, which is why I recommended that we have a line graph of the pie chart. What I have found is that when the S&P is going up, but the green portion of the pie is declining, fewer trades work. That's really the bottom line. Because 90% of trades that are recommended in the Delphian system or anything are bullish. Also, 90% of trades that are recommended are not on, they're not on the big stocks that drive the S&P, which are Apple, Microsoft, Google, that sort of thing, right?
Mhm.
So what I found is that if the S&P is going up and the green pie is increasing, more trades work than if the S&P is going up and the green pie is decreasing. And we had this situation, the S&P was doing really well in June of this year through July, but that green pie was decreasing a lot for that month. And a lot of trades didn't work.
Yeah,
So-
I'd have to back up exactly what Sudhir just said there. There's been a lot of comments in the last few days that the market was, or the S&P was sort of flat. It was down to start, I think it was Friday, because that was Apple and Amazon both reported Thursday night and they didn't do so well. And those are two of the big group that Sudhir just mentioned that has been keeping the S&P gradually going up, because it's been those stocks that have been doing really well, and the rest of the rest of the S&P 500 and the Russell has not really been contributing that much. It's been a smaller group, which is the portion of the pie that he was just describing there. So just recently, though, after that, I think Friday was a up day for the Russell, big up day for the Russell, as a matter of fact. Monday was a pretty okay day for breadth of the market. The market sustained that was the commentary, is that the markets or the whole market universe, as Lee was kind of thinking of it, was sustaining the blow of those two big heavyweights not doing so well, and they were down a few points even because they drag they make the large cap indices move a lot. But the breadth of the market has been pretty good. So I think the idea is that this is going back to what Dan was saying, is that more of the little guys are now, people are trading into the smaller, the other guys, other than the big fan group, and that's good. So the opportunity seems to be, I would tend to agree with Dan that if I was looking for if I thought it was a good idea for some stock and it's in the Russell, I might take more of a shot at that because there's more opportunity than, well, Amazon just might do good in the fourth quarter because, everybody buys Christmas stuff, sort of thing. That's just my comments there. But I
Yeah,
right
so
behind Sadir there. Sadir was right on there, by the way. Good job.
Yeah, so it started, someone asked, I forgot who, what confirming signal do you use? And just my 2 cents for whatever it's worth, the confirming signal I use is this green pie. Well, it's green and red, but the green portion of the pie is my confirming signal. I'm more aggressive when S&P is going up and the green pie is going up versus if they're disagreeing, right? And if they're both going down, of course, that's just not good.
Hey, Sadir,
Most trades are bullish.
what time period do you look for? I mean, because we were talking about, we're doing a revamp. We were talking about putting like a 1 week delta between, like this pie and like, okay, here's last week and then here's this week, like a, 5 trading day kind of spread where it shows like you'll be able to see quickly the difference in the last 5 trading days.
I think that's fine. 5 trading days, whatever you have room for. I write down this green number in an Excel file that I track. I can tell you what the green pie was, 60 days ago. I write it down in my Excel file.
Yeah.
Right. And of course, that's this big long graph that you have here.
Yeah.
Right. But I realize you have only a certain amount of space on the dashboard and all that kind of stuff. But it's kind of nice if you can do a 5-day trend, or 10-day trend. Kind of nice to see, that really quickly, right? Of course, I can go to the market pulse and see it even more. But like I said, my trading experience, and I trade every day using the Delphian system, is a great confirming signal.
Mm-hmm.
And it's really simple. It's just what percentage of stocks are bullish versus bearish according to the Delphian rating system. Really simple, really good confirming signal.
Just a question, is there a way to just combine or attach I don't know what the right word is integrate, probably is a better word, integrate the market pulse picture with the bar charts and the pie chart there with the time machine, and just be able to, when you're clicking a day, have the different pictures show up? I don't know how hard that is, but that'd be the ideal way. Then you don't have to, you can throw his spreadsheet away.
Yeah, you can go back. It'll populate each day. Like,
Yeah.
Yeah. Okay.
Yeah.
Yeah.
Just pick 5 days, every 5 days or something, you get a better picture of the chart. Then you're
Yeah,
we're done, I think.
You would just kind of want to know the short-term trend, right? I mean, that's the goal there.
But I think what I'm taking out of what Sadir's saying and Dan and Dave is maybe, and you'll correct me here, we want to contrast the FANG stocks, how they're doing versus the rest, the other stocks in the S&P 500. Meaning, if that green pie is going down, but the dark state, no, okay. That didn't, okay. Let me think about that more.
No, yeah, so like this market pulse would be like, it's more representative of the broad market. So it doesn't weight, any stock greater than other. It takes into account ETFs. I mean, it's about 4,000 stocks. So this is generally where things are moving, like overall. So it'd be like the Russell 4000 or the Delphian 4000. So,
Exactly, it's 4,000 stocks, which
Yeah.
it's really good indicator.
yeah. So, I mean, Lee, I think it goes back to like, okay, there's different ways to like skin a cat, like as far as, the market analysis, you can look at SPXI, the Russell, which is what I prefer to do. Some people like to do sector breakdown. I mean, you can go through all the different sectors and do the same kind of analysis for that. So, I just, we've been doing SPY and the Russell for a long time, and we integrated that market pulse, which I think been very helpful. And we're always looking for more tools to help us with, direction overall. But, I think it's very important to, you've listened to what Sudhir said as far as the green pie, and maybe we'll have a Sudhir indicator, up right next to it, whether, it's a buy, hold, or sell, as far as the trend. So
I'm always
Sounds
available
good.
for an opinion.
what's that?
I'm always available for an opinion.
Yeah, so,
Hey,
okay.
Shawn,
Right.
yeah.
Shawn, in the beginning, you said the market is overbought, but yet we're saying bullish. I mean, that seems to be kind of conflicting itself.
Yeah, so we're over that overbought level as far as state ones, like that. Once we're over 45, it's just you have to tread lightly, be careful. Like, obviously it can run above there, but typically, outside of some irregular events, like that range in the 45 range is where it'll turn around. That's why we put like an overbought. It's not sell. It's not like a sell signal. It's overbought. So overbought doesn't mean, everything's going to fall to crap. It's just like, we're at lofty levels right now. That's what it's saying. It's not like it's not a sell signal. You understand that?
Yeah, that's how I kind of took it, that, that if we're overbought, then, it needs to compensate and start selling everything off to get it back to its normal.
Well, it's just, the state ones will drop, like, so there'll be some pullbacks, like when you typically get up there, and, you can look at all the charts, like, when they drop down to 2, and, they can eventually raise back up, but it's just, that's the kind of typical level where things turn around. So like the base case. So that's why, we put that out there, that level, but, it's not necessarily a sell right now. When you see, like, okay, everything's at resistance at, target 1 and 2, and, we're above, 45 in state ones, then yeah, I mean, I'd be even more cautious, but, obviously it's been a very bullish market overall. So, medium term, it's still looking bullish overall. Short term, it's just, be careful. We're running into resistance, we're overbought, just things like that you have to be, mindful of as far as your trading.
Yeah, Dan here, we've seen not too long ago where that S&P just went up into the stratosphere. It stayed overbought for such a long period of time that it was
Right.
almost off the chart,
Yeah. Yeah.
So you never know.
Yeah, I mean, that's an atypical case, but, and it's just like, the state modeling. I mean, it's the same exact thing. So if you think about it, when we look at state modeling, we plan for the base case, right? Where it's going to go about the average move, run into problems at target 3, and, turn around. That's the same thing with, this market pulse kind of levels that we put out. Obviously some of them, get above T3 and just run to the moon, and like, okay, that's, the atypical case, maybe 10% of the time, maybe, if that. So same type of thing, nothing is exact. This is an art and a science, All right, spirited discussion. Appreciate that. My neighbor is apparently playing some movie with loud sound effects. Sounds like I'm at the AMC theaters. Okay, so what I did just real quick before Shawn takes over, I produced this. So yeah, we've transitioned to the new bullputs. So I just wanted to throw this out real quick. I didn't do all the metrics. So like what I did here, so this, all of this is from, the last update. And then this column over here is, update through 11/2. So I think the last one was end of August. So all this is like August data that I just carried forward. And then, we have the new bullputs. So what I did is just kind of updated, the current profits for these. I took out all long calls, so, I'm not tracking those anymore. But, just went through and updated a lot of things and, just want to, basically update you guys on things quickly. I mean, like the new bullputs, this one did really, the Keltner has done really well, since August, from 35,000 to 42, the new bullputs, 80, so you're going to make a lot more, should make a lot more in those puts, but than the other ones, but 87,000. I think this is only one trade as far as the new bullput there. But all of them are still kind of trending higher. I mean, the 5-year has been the best performer so far, with the amount of trades. But this is hold on, there we go. So the 5-year, and I always tell you guys, if it's on the 1 in 5, that's a really good bet. Qualifies for both. So, this one's gone from 32 to 44 in what, 2 months, 43 to 52. So these are all doing really strong. The new bullputs, tracking them actively. Those are doing great. That's, I think, one trade. Keltner, they're all doing pretty strong. So just wanted to put that out there. Obviously, I'll update this on a quarterly basis. Just want to give kind of a mid-quarter update real quick. So I'll do this at the end of this month. I'll update it. Like with
Will
all.
this be on the share drive?
What's that?
Will this be on the share drive?
Yeah, I can throw it on there.
Yeah, I like to pull it down, look at it in more detail in my own pace.
Yeah. So I'll just do this. So this was. Oh. That way you're not. Hopefully, does this make sense to everyone? I don't know.
So that's results from January 1st to August 31st. Then the current is just November or what?
Yeah, so this is just the current profit. All I did update the profit. So this is all the I'm just trying to make it, there we go. So this is the update here.
After August, so that's from after August 31st.
Yeah, so this is all the trades. So, if there were still open trades, like 11 trades. So those will probably have closed out by now on here, and some new trades have come through, but I'm just tracking generally the like the profit, total profit with the profit update on 11/2. So
Okay.
these are all still
That is cumulative, right, Josh?
yeah, cumulative.
Okay.
Yeah. Let me just put that.
Yeah, that just to clarify, that would be great.
Yeah. I'll just put this update. So this will stand out. Okay. Does that make sense to people? I don't want to confuse you. Yeah, so, yeah, tracking as these old bull puts are closing out. And then the new bull puts are taking over. Eventually I'll get the new bull puts backfilled so I can do the whole year with those, but I'm doing what I can right now, so. That would be a lot.
That's going out on Google Drive?
Yeah, I'll put it on there right now.
Okay, wonderful.
Cool. All right, any questions on that?
That looks good. Thanks for doing that.
Sure. All right, John, you
I'm-
ready? Keep stealing
Yeah,
your time.
I'm ready. Can you hear me?
Yeah, I said I keep
Okay,
stealing,
cool.
keep stealing your time.
That's okay. That's all right. I can adjust, so no problem.
I don't hear,
Yeah, and I was just gonna, huh?
it's nothing, go ahead.
Oh, and no, what I was gonna say too is that sheet that Josh had up for the tracker for the high probability studies. I use that personally a lot as well, and I don't know how everybody else uses it, but if I see a study that comes out, a one study or 4 studies for the day, I'll look at the studies with the sector that it's not the sector, but the segment of the high probability trade that it comes out on, like if it's the 1 year, and then I'll pull up Josh's tracker just to see, how has the 1 year been performing versus maybe the other one, and then do some more analysis on the actual trade. And if the trade looks good and then the results look good from what Josh has been tracking, I'll typically will trade it live. So, that's just personally how I use it. I don't know how everybody else uses it, but I do use it, Josh. So thanks for putting it out.
What's your secondary look, other than, what he's providing?
Yeah, I mean, that's pretty much it. I'll look at the 1 year, I'll look at the win percentage for the trade. So as the probability study comes out, within Delphian, how many occurrences did it have on it, what the back test was. So I'll just look at those little bit factors that we have in the system there, and then just verify, so if there is more, if there's some days where we had mentioned before where there are a lot of trades that populate within the high probability trades, I'll try to whittle those down a little bit by just maybe looking at those historical results of what Josh has been tracking for the first part of the year, just trying to find some external way maybe to, instead of taking 10 trades on, I can take, 3 trades or something like that.
Okay,
So
gotcha,
that's it.
thank you.
Just a personal way to kind of take some of them down. Because what Sudhir had mentioned a couple of weeks ago, I think is a great avenue to take. If you get a big down day and you have 50 of those high probability studies that come out with 50 different symbols, maybe using that analysis and applying it to one of the sectors, the SPY or the Russell, and then trading that versus actually trading all the 50 symbols. That's a good kind of way to make that adjustment too. Because if there's 10 or 20 symbols on there, I'm not going to trade them all. I don't have the capabilities to do that, and then it's going to be a lot to manage as well. So just trying to figure out what personally works best for me to whittle those down a little bit to make it more manageable is key. And one way for me might be a little bit different for you, but I just try to see, this one's performed 95%, this one performed 88%, and then I might take the 95% just depending on the symbol. Obviously, everybody has their own different emotional opinions on a certain symbol that they might trade or they might not trade, and then the certain environments that we're in and things like that. So I try not to put that analysis in there, but it's always in the back of my head, So yeah, a couple of things I wanted to show you guys. One thing that I wanted to show you real quick while you guys were talking about the SPY, the ETFs, and what makes them up. When you go into Delphian, you can come into the ETF industry and then the ETF overview, and then you can actually input those ETFs into the symbol search, and then within that symbol search, you can look at what stocks take up a weight of a particular indice, and then kind of just run the analysis that way. Because we were talking about some of these bigger companies really pushing, the S&P as of late, and you can see Microsoft, Apple, Amazon. I mean, if we look at this first list here, big companies take up, more than 1% of the weight. And even on the second page, we're looking at ExxonMobil, AT&T, MasterCard, and Home Depot all take up, so we have basically 14 symbols that take up more than 1% of the actual weight of the SPY, and then even some of their Microsoft is 4%, Apple's 3%. So just to give you an idea of what the weight is, within the C per the particular symbol, and it's a really quick way to kind of check it out and look at it and see. So that kind of just relates to what you guys were talking about earlier. But what
It's
I do want
interesting that in
to,
the S&P, in the SPY, they have both GOOG and GOOGL, right?
right.
Which
Yeah,
is,
that's one of the, go ahead.
well, if you combine them, that if they're both over 1.5%, so it's actually the biggest weighting.
Right.
It's the same company, it's just two different classes of stock.
Two different classes, right? Yeah, and that's why if you look at the bottom, there's 504 or 503 symbols there. Let's see what it says. 503 or 4. But yeah, you're correct. If you take those to 503, and like you said, that's Google A, Google C, or Google C and Google A. So, and like you say, that's 2.9, almost 3% between those two if you put them together. So, so yeah, interesting. But yeah, it's a good way to quickly kind of look at it and see, if you can try to figure out what the driver is and how that relates to, that market pulse. Because I think, like Sudhir mentioned, that market pulse is a great tool that we have, and we're looking to expand it and make it more prevalent on the dashboard for you to use and see that change. So running analysis like that is great. I wrote all that information down, so I'm going to try to look deeper into some analysis like that too. So, so I want to make sure, we made that email, that weekly earnings email live on Sunday or Friday, so you should have received it on Monday. So did anyone receive it or not receive it?
You faded out. What was your question?
That earnings email. So this earnings email we had sent out on Sunday at noon.
Yeah, I got it.
So I just
On
wanted to-
Winslow. Yeah.
Okay.
Yeah,
Okay.
I got it.
All right.
I got it.
All right. Cool. So yeah,
But
if you didn't get
I
it,
wrote
just
to you that, the morning pre-alert didn't come, I looked at the weekly and it showed you the ones that the trades you should expect. But on Monday and Tuesday, there were trades that should have been on the morning pre-alert that it never came, right?
Right. Yeah, I think you had CBO and then that CVX maybe. And
Yeah.
I looked at all those and I just made sure. So I wanted to make sure they were on our list and make sure we populated them within the, the earnings plan, and we did. So then when we get something like that, I send it off to I tried to send it off to our IT team to see if they can, diagnose what was the reason it didn't go out and give us a reason. I haven't heard anything back yet. But those should have been in there. So I apologize for that. You're keeping track of them good, which is great. I mean, that helps, but that's what we're trying to alleviate, having you or anyone track all these things individually, and we want that data to be as accurate as possible when we push it out. But typically that's kind of the plan I put in place now myself, just to let everybody know, is that when I do get a day that says no trades found for those pre-alerts, I'm going to go in and basically do the research and say, okay, what ones should have populated, why didn't they populate, and then send that off to the IT group to figure out if they can diagnose what the deal is, because we don't want that to happen. I mean, if we do all this work to set that plan up, and then we expect the platform to produce them properly so you guys can see them on a timely manner. And if it's not happening, then obviously we want to make sure it's corrected. So again, if you see something like that, please let us know. But yeah, just any questions anybody has regarding this earnings alert that comes out. So again, it's going to come out every Sunday at noon. You should be able to get it, kind of run through it. I'll run through some of the fields now so you can see the differences if you haven't specifically looked at it. But are there any questions before I kind of run through it?
No, it looks good. I like getting it.
Okay, cool. And
I got a general question, if you're going to get to it, maybe. And what I've sort of been hearing is that, because we're still past the earnings season, but I'd say, I don't know, we're 50% through it, maybe by numbers. I don't know what the numbers are. We're in the middle, but there's still some to go, but we've got a lot of info. So my question was going to be, so far, have you noticed that the number of moves, outside the market maker move are more or less than than a typical quarter. I think I've been hearing that there's been more moves that are surprisingly outside than normal, but I don't know to what extent that is. I'm just trying to qualify for whether I heard that right or wrong, or did I even hear it?
Yeah, I haven't been able to run the analysis to get a specific number, but I would side to that it seems like there are more moving outside of the range than typical. And I think that's that uncertainty, and then it might play into that whole, the supply chain issue that we have as well with some of these other companies. And then just a lot of shift in the market, with the news that's coming out and just different things happening from, the biotech companies to the vaccine makers to the clothing companies and retailers and things like that. That's my personal opinion. Does anybody else have any ideas on that? But I haven't done the analysis yet. But once we get done with the quarter, I'll be able to look at it a little bit further and see.
And that's what I've been hearing also, that it's not necessarily the COVID issue that's making things be inside or outside the move, because we're kind of like had about 7 or 8 quarters about that now. But it's been the supply chain surprises, if you will, that have affected companies that we didn't think they would affect versus, hey, it didn't affect companies we thought they would affect. And that's the reasoning that I've heard anyway. So it'd be interesting to see how that plays out after the whole season's over.
Right. And I think Josh didn't mention it on this call, but on a previous call was mentioning the fact that, a lot of it to do is with the forward guidance, so not necessarily the earnings from last quarter, but the forward guidance for the quarters upcoming. And that might cause some concern. I think even you mentioned it last week, Dave, about some companies too. So, or talking about that exact point. So yeah, it's a big uncertainty. So you're getting some pretty decent moves, right?
Yeah, especially since they didn't give guidance for like almost a year, and so there's a lot that are just starting to give guidance now, and that might be a reason for the surprises too. Yeah, like you said.
Right. Very true.
Hey, Shawn, Dan here. Question?
Yeah, Dan, go ahead.
Yeah, when I got this email, I went and looked at a couple of stocks that were coming up for the week, and this obviously doesn't give you the strikes or anything like that. So I ended up going back to the what do you call it, the Google Sheets or Google Docs.
Yes, sir. Mm-hmm.
To see what was there, and then I went to Delphian to the option montage, and just to check the strikes and everything. This on Sunday, and it seemed like the option montage on Delphian was out of whack, because I was getting a lot of zeros instead of the fields being populated.
Mm-hmm.
Is that because it's the weekend, or was something not working?
And when you say montage, you mean the option chain?
The option chain. Yeah, I'm sorry. Option
Okay.
chain.
No worries. Yeah, there was one session there where they had to pull in some more data and update the platform. The platform didn't seem to update in the appropriate time on the afternoon. So I had a couple like that as well, where there was a brief time where I was looking at the option chains and it wasn't pulling them up, or I was trying to put some information into the virtual portfolio and it wasn't letting me add in a particular option expiration. So I think that was just an error on bringing that data over from the source that we bring it over from. Just a little bit of time there that I think it was causing that problem. So you should always, as long as we have the data, there should be data in those fields for the option chains.
Yeah, I went through several different of the option trades that came up, and it seemed like every time I was going into the option chain, like I was looking, for instance, I wanted to see what a 10 delta, just as an example. Let's say I was looking at a 10 delta to see what it was trading at. The 10 delta was almost up to the at the money. It's like,
oh, really? Okay.
It didn't make any sense. It's like, where's the rest of them? And then a lot of the fields, for the pricing, were just zeroed out. So I'm like, something's not right.
Yeah, and we pull that data, and they fill in these fields typically every afternoon. So that might have been just a time gap there. But yeah, if kind of similar to what Sadir had seen with us not populating those pre-alerts. If you see something weird like that and you have a chance, please send it to both Josh and I so we can get it over to those guys and say, hey, we're missing this data for some reason, and they can kind of diagnose it. But you should have values here. And yeah, you're right. I mean,
Yeah, I did
delta.
take some screenshots. I could send them off to you.
Okay.
So
Perfect. Yeah. Yeah. If you can, that's great. Cause then we can kind of, see what's up with it and then let them know. Cause if something's wrong, they got to fix it,
yeah,
sooner
okay.
than later. So yeah, but you have values here and the weekend shouldn't affect it. So the weekend, you should get the values from Friday's close. So it's closed should be, visible in the platform on Saturday and Sunday.
Okay. Yeah.
And then Monday too, until Monday's closed.
Yeah. Yeah. So, because we
So
don't
I
actually get the
apologize.
strikes until it comes out on the daily, right?
That's correct. Yeah. So this one that comes out on Sunday is really just kind of giving you a heads up of what's to come about for the week. So if you wanted to try to plan your week out on some trades that you might want to implement for the week, that Sunday email, which displays this information, hopefully kind of gives you that idea of, hey, I really like Moderna. I know Moderna is kind of an expensive stock, so maybe I want to be prepared for the third, before the market opens and see if I can, get into this, get into this stock, get into this bullish runner. So just kind of give you a heads up of what's coming out.
Yeah. Okay.
And I'm just looking at that real quick. But and then two, I wanted to bring this to your attention, and we're looking to make some adjustments on this as well. But basically, this information. So I clicked on the email from Sunday, and if I click it on Sunday, what it does is it's going to give me the trades that are viable for all these particular strategies for the next 5 days. But if I open it up today, which is Wednesday, it's going to give me the same results. So it is dynamic, but it's going to give me the same next 5 days. So it's looking from today 5 days ahead. So it's going to change. So if you opened it on Sunday, you might see a couple symbols that had earnings either on Monday or Tuesday. And then if you open it on Wednesday, those are going to drop off because it's pulling in for the next 5 days. So, what we talked to the group today about, and Josh mentioned it, was having it to where we can go back in time and you can see, if you pull up Sundays and you had the plan and then you go back in on Monday and you want to see the same exact one Sunday, you can go in the time machine here and be able to do that. So we're trying to get that, that basically that capability added so you guys can see it. So when I open this link now, it's showing me all the trades for, 11.3. You can see 11.3. This one actually still has 11.2. It's a bearish runner. So I'm entering in on 11.4. But you can see some of these, have a trade date as of the close of yesterday because it's pulling in close of yesterday's data moving forward 5 days. Does that make sense?
Yeah.
Hey, Shawn,
Yeah.
can you explain, and I'm not good on the Greek stuff, so I don't understand, what is IV30? You have previous earnings,
yeah.
IV30, ATM IV30, 1 year IV30 range. And, maybe other people are better at that, but it's a term I don't really have clear in my head.
Okay. Yeah, no worries. Yeah, definitely. So when we're looking at some of these, like the volatility, so I'll skip these two for now, but the volatility rise. So we're looking at the volatility rise, and a trade like that, we're really looking for the volatility to increase in the particular stock, up to the earnings. And then we're also obviously looking for the volatility or the premium to increase in the options. And then when you're talking about, IV, that's exactly what you're talking about, that implied volatility. So within our option table here, just for Apple, IV, which is your implied volatility. Now these are just the Apple for this week's expiration. So it's somewhat low, but if you're getting an increase in this implied volatility, that means that there's some volatility possibly to have in Apple. Typically it's going to be an earnings announcement or maybe an iPhone release or something like that. And if you see this implied volatility increasing, then typically that means that the premium that you're going to pay for your options is increasing as well. So when we talk about for like the stock price change one day after, that's just price change. So your previous earnings, 30, 10 days prior to is going to be 26. That's the implied volatility 30 days out on those 30-day options, 30 days out is going to be 26. And then it just gives you the slider on where that is in range with your yearly range. So if it's 26 and then our previous earnings IV the day of is 28, you can see that it increased a little bit. The implied volatility went from 26 to 28% before the earnings announcement. And then you can also see that now the current IV is around 27. And then the slider shows you that 1 year range of where the implied volatility has been for 1 year. So from 20 days, it's been from 20% to 47%, and it's currently at 27. So typically when IV is low, you typically want to be a buyer of options because the expectation is that the IV is going to increase. But if IV is on the far end of the range, like it is up here, possibly for EA, then you could assume that the IV should be dropping. So then people typically want to be a seller when the IV is higher. Joe, Josh, is that a fair explanation?
Yeah.
So is that kind of like an IV rank? You can look at it as an IV rank?
Similar to an IV ranker. It doesn't rank it by quartile, but it ranks it, those at the money options and how much implied volatility they have in there based on that yearly range, right? So yeah.
Similar. Yeah.
Is that fair, Sahir? Does that kind of make sense?
Yeah, so what was throwing me off was the 30. So what you're saying, that's the implied volatility for an option 30 days to expiration.
Correct.
And if that particular stock doesn't have weekly options, then how do they measure that? Like, because they're going to always have an option 30 days out, right?
Yeah, typically when they measure that implied volatility, or when you see it within Delphian 2, it's measured based on the next monthly's expiration.
Okay.
So you might see some implied volatility on your weeklies that is definitely going to be higher than your monthly expiration, just because, right? Like if Moderna has earnings coming out tomorrow, the options that expire this Friday should have more implied volatility than the options that expire 30 days out. So that's just a little further analysis that you might have to look if you're trading those weeklies versus trading those monthlies, because it will be different for sure.
So really it's measuring the next monthly in general, right?
Correct. Yes, sir. Yes.
Okay.
And sometimes you'll see it. I mean, and here you're talking about at the money. So we're just talking about the at the money call and the at the money put at that particular time, the strike. So the at the money call and the at the money put. So a couple of fields here that, the fields are different. So all of the columns are different depending on the type of trading strategy that we're doing here. So for our bullish, our bullish runners, again, we're looking for the stock price to move up after the earnings announcement. So if you look here in this column, we're saying, what is the stock price net change 20 days after the previous earnings announcement? So last quarter, how much did the stock price move after the earnings announcement? EA moved up 6.23%. And how much did the S&P move up, SPY move up in that same time frame? 2.63%. Interesting one is Moderna. So Moderna comes up as a bullish runner, but last quarter it actually dropped 4.47% the 20 days after the earnings announcement, again, while the S&P was up 2.63. So it kind of just offers an analysis for the previous quarter, kind of give you some insight into possibly what's going to happen this upcoming quarter. We do offer these current EPS estimates as well. And then with your runners, your bearish runner, it's going to be a similar setup. What happened to this stock, 20 days after the earnings announcement? It was down 9.38%. And then what happened to the S&P in the same time frame? Okay, it was actually down, or excuse me, it was up 1.3%. So you can see that pretty much lines up with that type of strategy of what we're doing there. And then, like we mentioned before, the vol rise, using the implied volatility. Our non-movers, we're looking at a stock price not moving in price. So what happened to the stock price the day after the earnings announcement last quarter? Okay, it was up 0.7%, it was up 1.91. So you can kind of see what happened with the stock price the day after the earnings announcement, and then also with the IV. So what happened with the implied volatility the day after the earnings announcement? You can see, and here we all have the implied volatility drop. And, with these non-movers or with the vol crush, we want that implied volatility to drop because that's where we're making money on that iron butterfly type trade. So we can see here with this implied volatility dropping, that should lead us to profitability in this trade. Doesn't guarantee it, but that's kind of what you want to see when you're looking at that field. And then the volatility crush one's blocked by one of my little things I have. Let me see if I can move it. Okay, so the volatility crush, we can see stock price net change day after previous earnings announcement. We can see it was up 8.42%. We can see what the IV was as well. So the previous IV the day of was 75 and the day after was 73. So the implied volatility did drop a little bit, but the stock price went up. So that could have affected the trade dramatically last quarter as well for Moderna, using this vol crush strategy. So, we're trying to add just some little fields in here. Some, as we've talked about before, we have tons of information in Delphian, that's in there sporadically around the platform that we're trying to organize better for you guys. And this is just one piece of the puzzle that we're trying to put together, based on the trading segments that we have coming out this week. What are some fields or some data that might be pretty important to make in some of your analysis, or, just might help you with your analysis a little bit further. And these are some of the fields that we had come up with. So, hopefully it definitely helps you guys out. Anything there that you guys see? Any questions, comments?
I think I need more clarity on what you went through. I mean, you've got estimate, then you have actual.
Yeah.
So, I mean, what do we have?
Yeah.
What to look at is, seems
Yeah,
to be
and
it seems like there's a lot there. I mean, I think the important thing was, okay, here's a stock, it's confirmed, non-confirmed, and, time of entry, period. But
right.
all that stuff to the right, I'm certainly not clear on.
Yeah, understandable. And it is a lot of information, and we've had small pieces, we've added more, we've taken some away, and things like that. And sometimes I think with some data that we have in the platform, it can be like system overload, right? You're offering too much data, that might be kind of muddying the waters a little bit. And this is just an extra tool, I think that we're trying to offer to give you a little more insight. If you do, if you wanted to say maybe why would I pick Moderna over EXAS, and that this might help you make that selection. It might not. If it muddies the water a little bit, I apologize, but that's kind of what we're wanting to get feedback from you guys. But yeah, really on some of these for like your current EPS. So for EA, your current quarter EPS is 76. The previous quarters it was 27, and then the actual was 28. So you can actually see that last quarter the estimate, versus the actual. It was actually, they had more, the actual was more earnings per share. And if you wanted to relate that to the stock going up, you could relate that to the stock going up. But here you got a different setup with Moderna. 6.01 EPS was actually more, but then the stock price went down. So, was down up into the earnings. I apologize. I was saying that wrong. So yeah, I mean, that's good feedback. I feel like if it does muddy the waters a little bit, then that's something that we need to know, because we need to try to figure out, are we offering too much information or, not, too little. So.
Yeah,
Well,
the first thing,
now that you explain it, it's easier to follow.
It's actually a really great post-analysis tool, probably more so, in my opinion, from the discussion just recently now here, is that then I wouldn't use it necessarily as a, to place a trade. I'd look at, well, okay, here's the ones I tried and the strategies I tried. This kind of gives you the information like, okay, did I pick the right strategy for what actually really happened? It's like, oh, okay,
right.
well, so the next time, you can factor that in. If you play EA every quarter, for example, I say, well, okay, now I have more analysis from last quarter, and it's like it'll help your confidence, I think. So I'd use it more as a post-analysis than a pre-analysis. And it also gives you a, strategy versus strategy kind of a thing. When you just showed, for example, that implied volatility in one case went up when we thought it would go down. Well, what happened to that? That was because it was a surprise announcement, and it was a surprise on the upside. And implied volatility rises when things go really up fast, is just as well as when they go down fast. So it's it's the surprise element that is, don't think of that implied volatility is only going to go down when we have more information and there's good information. It can go up when there's a surprise with good information, as well as
True.
probably goes down more when there's a negative surprise, but it can stay elevated. And that's just what happened right there, because it was like, and you think about that, why does that happen? That happens because the market makers have all these out of range, and people are having to cover or get out, right? So there's more active trading because they missed and they want to like mitigate their losses or whatever. So for the next couple of days, this probably impacts the thought process of when you're doing the iron butterflies, where you do it for that week Friday or the next week Friday kind of thing. This would be a good analysis tool for looking at the particular individual stocks that report on Tuesdays versus Thursdays, I think, for that reason. Just saying that I think it's a really good post-analysis tool. I like your little sliders there, and it actually is a pretty good way if you don't quite understand implied volatility that much. You can say, well, it's more toward the left or the right, so it's a good time to be a buyer of options, not a seller. That was an excellent point.
Oh, good. Yeah. Yeah, and I think it takes some time to get used to it, but yeah, there's a lot of information here, and so I'll use it, I think, like you mentioned too, Dave, and I also use it if there's too many on here. It kind of helps me break that analysis down a little bit further. What did it do last quarter? The back test, we've done all that with the back test. We've done all that work, but this is just offering kind of a little more insight into some of the mechanics of what went on and what's going on the previous quarter, and to kind of give you a heads up on it, I guess. So it is a lot. We know that we have a lot of data in the platform, and we want to make sure everybody knows it's there. So sometimes we might show a little too much or not enough. So we're trying to find that balance between the two. So yeah, above and beyond that, I wanted to kind of show you guys some of the break-even analysis and things like that. I did set some stuff up the other day, and then whenever they did that re-upload in the afternoon, it wiped away a lot of my data. So I ran out a bit of time. We ran over some minutes here for what I was allotted, but I'm going to go over that break-even with you guys next week. Again, I want to make sure that we're able to, kind of run a trade in the virtual portfolio and see where that break-even analysis is, or our break-even points is before we put the trade in, and just get an understanding of the difference. I was really going to compare the long call strategy we had before on some of our bullish pre-runners versus the bull put strategy that we have now, and just kind of analyze the two different break-even points, because they are very different break-even points on those trades, and just how those relate to, not only the movement in the stock, but then the change in the delta of the option. So as that stock price is changing either up or down, how is it affecting the delta, on those options that we have, and how is that delta, affecting the value of either our straight long call or our bull put spread. And it really is a good example of, why to choose one trade over the other, in my opinion. And again, I was definitely, on the board of just doing the long calls previous to that. And, my mind shifted. So it's exciting for me to kind of share, that analysis that I'm finding with you, because it's kind of changed the way that might be the most, profitable way to trade some of these trades and the most profitable. So I'll share that next week. But yeah, any questions on this as it comes out on Sunday, or even if you guys look at it throughout the week, please don't hesitate to send them to me or Josh, and we can answer them for you guys. I don't mind going over with you guys, and obviously any comments as well. Please send them our way. We're making some big changes in the platform to make it more friendly to you guys to use, and make sure we're offering the information in the correct way. And obviously the feedback is greatly appreciated. So until next week, guys, I appreciate you taking the time.
Are you gradually bringing out the new updates, or are you just waiting for like certain releases?
Right now, we've made some. Josh, you and myself have made some pretty decent changes. Some of them are coming in as we're making them, but it's really a lot of it's going to be kind of pushed out as a whole. We're making sure that everything is in line. So obviously we want to make sure that all the fields and everything's working properly, the way that it looks, the way you can navigate. So there's everything like that we're trying to make sure that it just works properly, you know, so you guys see it and can use it, you know, function wise. But any changes on this one that I'm showing here, not only this page, but even just the platform as a whole, any problems that you have, we want to make sure we're addressing them and fixing them, because those are first and foremost, in my opinion. So if there is something that's not working right for you, let me know, and we'll have it corrected on this particular system here. But we are just trying to make some new enhancements to it, and those are all going to come out at the same time.
Okay. 2 weeks ago, you talked about a secondary indicator or review when you do look at the earnings. That was never discussed. Will you bring that back in again, or what?
Yeah, so just doing what, like a secondary review when I myself am looking at the
No,
earnings
there was
trade?
going to be like a secondary check to see, okay, should we buy it or not, rather than just
Okay.
one buy. I think there was going to be a discussion. I think it was going to be discussed 2 weeks ago, but we always ran out of time.
Yeah, we seem to run out. Josh takes up a lot of time. No, and it's good when you guys talk. But yeah, I'll look at that and see if Josh can remember too. If you can think of exactly what it was, let me know in an email. But other than that,
It was never brought up. It was just talked about. Okay.
Yeah, I
what would
think,
we do as a secondary confirmation?
I
Kind of
think
Yes.
you
pull out
want to
candidate trade?
do state modeling as the first one, right? You want to check the modeling on it?
Check the state modeling, and that's something we had talked about, I think, too, right? Checking the state modeling possibly. Yeah, I can talk to Josh and Joe about it, and if there's something we can discuss, I can kind of incorporate that into a discussion as well.
Kind of thought that
Yeah, I'm
was just
sorry.
that discussion was just like several of us probably use different things for a secondary indicator, and probably they're all different. That's why
Yeah.
I didn't know there was an action item for Delphian to do anything there, just myself, but maybe I missed it.
But we can figure some stuff out. I mean, I think we've kind of, it seems like the communication between everyone has opened up pretty well, you know, in the group. Like, we've been talking a lot more and discussing ideas a lot more, you know, over the past couple of weeks. So, you know, talking about some of those things and having an hour, or, you know, close to an hour discussion of what one person uses versus the other, you know, might be a useful tool for everyone to see kind of, you know, what are we using and can I improve it? And, you know, like I've mentioned many times, I think collaborating in this group is a huge asset. I get a lot out of it, and I hope you guys too. And I think being able to talk some of those points out together just makes it, you know, just it helps improve our trading.
Shawn, question for you.
Yeah.
I was looking, excuse me, I forget which stock it was that I was looking at on one of the earnings trades. But I went back to, I refer back to the Google Sheets to see exactly, you know, what the plan was to where to place the strikes. And I noticed on at least one trade that the strikes didn't correlate with the mechanics of the plan. It was like a skip strike, you know, instead of it being more symmetrical, it skipped a strike. So now I feel like I have to check every one that I get. So have you? I don't know if I'm doing something wrong or if you've noticed that at all.
No, I don't. Yeah, I don't think you're doing anything wrong. Ones that I have noticed it on are going to be more of those vol crush, those non-mover trades where we have like that iron butterfly trade. It seems to be those. Let me see if I can get this out of the way.
And that's what I was looking at, was an iron butterfly.
Let me see if I can move this out of the way and find it so you don't have to look at it. So some of those, those iron butterfly trades, you know, they're really based off of, let me see, I think this is one maybe here. I'm copying some of these. So the iron butterfly trades, you know, the non-mover and then the vol crush, you know, are based off of the expected move. So depending on where that expected move is and the strikes that are available, it could skew, you know, the strikes that you're buying on the outer wing. So for this trade here, like this HIG, this HIG, you can see that it came over as a non-mover trade. But if you look at the sell options, we're selling a 73 call and a 73 put. Now the put it's buying is a 71, which is 2 strikes away from the put that it sold. But on the upside, it's actually buying the 76 call, which is 3 strikes from the call that it sold. So you have 3 strikes spread on the upside and then a 2 strike spread on the downside, right? Do you
Yeah.
follow me?
Yeah, oh, yeah.
So it's using the expected move there, but also sometimes depending on the strike selection that's available within the option chain, it might have to adjust it 1 strike or the other. So that you will get a little bit of, I have to look at this one. I'll look at this one individually real quick when we get off the call, and then I'll send you a sample of why it did that. But that's sometimes why it's doing is it's looking at the strike. It's a different end strike that's available when the system is looking at that option chain to actually pull that trade in. So sometimes you'll see it a little more than that. If I pull this trade up myself and I can't have a balanced trade, between the strikes, then I'll have to really analyze a little bit further to see if I'm actually going to do the trade. So if it's skewing it one side to the other, then it's basically adding more risk on one side of the trade versus the other. Then I might have to pass on the trade myself because I'm not able to make it balanced, to make that risk, equal, because it is going to affect, the risk of the trade, right? With this particular trade, if you just looked at the 71 versus the 73, you'd say, oh, okay, I got $2 of risk, minus the credit that I received. But that's not the case, because if the stock went higher, now you actually have $3 worth of risk minus the cost of or minus the credit of the trade. So you have to be careful for sure. If you see them like that, and you
sometimes by the when that the daily alert comes out and you're putting it on at the end of the day, sometimes the stock has moved quite a bit, so now you have to adjust all 4 of your strikes, and it seems to be a little bit challenging at times. It just not challenging, it just takes time to analyze it and figure out where you should be now.
Yeah, I agree, and it comes out at 3, so the strikes should be fairly close with the strikes, but I agree. I think sometimes it's pulling those not as accurate as I would like to be either, right? So we have some limitations, unfortunately, with what the IT group does. I mean, things like this, I'm trying to make them right, not only for you, but for me as well, because I use it too, not necessarily that it's wrong, but like you say, I'm trying to, I don't want to look at the trade and it take me 20 minutes to to construct it and then actually put the trade in. I want to kind of have that data, fairly accurate as possible at the time that it comes out, because I want to be able to, look at it real quick, input it and get filled and move on, right? So some of these do have some limitations. We're taking a back test that is, the back test is from the previous night's not the back test, but the trade is from the previous night's close. So we're trying to offer up as up-to-date information as we can for the next day. So some of those limitations, I think, cause some problems with the coding department, how that information is pulled. But yeah, if you see that, please, again, let me know, because these are parts of the checklist that, I want to write down and make sure that, step, 1 through 100, I'm having these guys fixed if they can. And if they can't, at least I can have a better answer for you when you see it too.
Okay, sounds good. Will do.
Just a comment, whenever you see that something that's not perfectly symmetrical, it's obviously has to make a bias one way or the other. So in your mind, maybe you should think of like, well, how do I have a bias one way or the other? And if I do, then just adjust, your strike accordingly. Pick maybe the other side. If it's like, well, I really don't think Amazon's going to be bullish this, or I think they're going to have problems with the supply chain or whatever. And say, well, okay, if it's not perfect, I'll go to the hedge to the downside.
Yeah, I agree with you, Dave. That's exactly my mindset whenever I go in. I look at what's my bias, regardless of what I'm seeing in front of me on the screen. It's like, right. You can make your own decision as well. Your own input.
Yeah, and it especially when there's if it's in the middle of a range that it's used, it has been in, that's one thing. But if it's like at the top end, like there's been a number of cases where we enter earnings season, the season's just getting started, and the S&P's at an all-time high, and the stock you're looking at is at an all-time high, and it's like, should I be, right equal, and it's turned out actually pretty effective to like take the right in the middle, just as it suggests, because what's happened is the companies that really have beaten, their stock price hasn't like really beaten. It's like kind of been muted. So, follow the plan is, but if you have a bias, just apply your bias. That's my secondary idea all the time. It's like,
Secondary, that's right.
what's
Yeah.
my bias on this? That's, that's
You're the pilot of the trade, so.
that's right.
That's right. And that's
Good
fair,
luck to
you know,
all of
and
us
that's-
on how we guess on that. Good luck to all of us.
And a lot of times too, if I have to make an adjustment like that, it kind of skews away from the back test that has already been performed. So if I have time, I'll try to just reconstruct that as a back test and see if I can kind of replicate that spread difference. So maybe on this HIG trade, maybe moving the strike out one more strike on the upside, would still be beneficial, or on the downside, excuse me, would still be beneficial and produce similar results as it did in the back test. But again, if you're trying to put this trade on at 315 and the market closes at 4 and you're doing other things, it's a little hard to recreate that back test in that short period of time and get the results and then put the trade in, and and so on and so forth. So it can be a little bit stressful sometimes. So it's going to happen. We're trying to alleviate it for you guys, and a lot of these things we're just trying to make it easier. And sometimes when we make 2 steps easier, it might make 1 step a little more difficult. So we do apologize. We're trying to make it fit all around, but sometimes we come up with these little hiccups. So. And not hiccups. I mean, the back test is showing us what we asked it to show us. It's just sometimes it's going to be skewed a little bit. So,
Shawn, one of the things I do, and it seems like it's an extra step that I take, and I appreciate the back test, and I go by that, but I compare it with the chart as it is today, and I find myself looking back to see where the chart was, back in time. And if I see there's some kind of disparity or a change in the direction of the chart or anything, something on there that can change my view and tamper the back test. I find myself adjusting to what I'm seeing on a chart in front of me. In others, at this current time, the now time,
right.
and I find myself at times that it just takes so much time. By the time I'm analyzing that trade, 4 o'clock hits, and I'm like, dang, I missed the trade.
Right.
Right. So.
Right. Yeah, and that's why I think too that's where that Sunday email I think would come into play. If there's some that you want to, if you see Sunday and that Moderna is one of the ones you want to jump in on, try to plan it out a little bit so you can be prepared for it when it does come out as the vol crusher, the non-mover, so you can kind of get a heads up. Because I noticed that in previous quarters to where I have a lot going on, just like you guys have a lot going on, and if it comes to Tuesday and I totally forgot that Moderna has earnings on Wednesday morning, I could easily forget, and next thing you know, it's 3:45 and I'm trying to figure out how can I get this trade in fast enough and make sure the results are what I wanted them to be. So that Sunday email is huge, I think, into trying to hopefully get a plan ahead of what's coming out for you, versus getting an update.
Yeah, I like that.
Versus seeing some at 3. Sorry. Yeah, versus seeing something at 3 and being like, oh, okay, I got an hour to try to do this in, as well as every other thing I'm trying to do within the next hour or two, so.
Yeah.
But yeah, I don't want to keep you guys. I mean, just so somebody gonna say something. I'm sorry.
I was just going to say one class comment on that. If you're like not sure whether it's like this strike or that strike, but you're going to do the trade one way or the other, this might help. Just remember that the iron butterfly, this is on the iron butterfly trades, they pay off the most when you're at the short strike. Whatever short strike you're going to pick is where you want the stock to be at expiration. So if you're debating that, like between $2 this strike or that strike, one way or the other, just think, well, where do I think this will be going to end up at expiration, which the Friday, and that should tell you that whatever that number that is that where the strike you should pick, because that's where the trade will be the optimum trade. Just saying. So, and that also, that thought process might help you manage the trade, whether you're going to get out the first minute then after the earnings is out on the opening or not. Because if it starts one place, but you think it's really going to go to someplace else, you might hang on a little longer if it's headed to where your short strike is. Short strike is where the optimum result is for the iron butterfly trade. Just keep that in mind. That's the way if I'm debating this strike or that strike, that thought right there tells me which one to pick. I pick, oh, here's where I think it's going to go. I'll pick that strike.
Right. Fair enough. Yep. Yeah. Thanks, Dave. Yeah. Fair enough. And that's a good point to end it on. So I appreciate you guys. Sorry, I took you guys over a bit, but again, everybody's starting to open up a bit more on the discussion. So we really do appreciate it. And like I mentioned, the feedback on the platform versus the feedback on the trade, all of that is obviously appreciated as well. So thanks again for your time, guys. Apologize for not doing the break even stuff, but we'll get to it next week. And again, any questions, just feel free to email me and I'll get them to you. So thanks, guys.
Thanks, Shawn.
Thank you. Thank you, guys.
Thank you, everyone.
Thank you.
Thanks, Josh.